Hi everyone, welcome to today's video. Today's video is very special because this is the first time I'm having a guest on my YouTube channel, and I'm joined by Zain's grandmother, my mother-in-law, and I will hand over the mic to her in a minute. But before that, very quickly, she's super nervous. She's super nervous right now. So I will try to do this video in Q&A format. I had to prod her a little bit to get her on this show, and she has graciously agreed. So we'll get on with the show, and I will introduce the agenda of what we are going to talk about today. But over to her very quickly, if you can tell us a little bit about you, what you have done in the past, what you are currently doing, and then we will start our show.
Hi everyone, my name is Venu. In the past, I have worked with Standard Chartered Bank, and after some time, I took VRS because of some family circumstances. Then, I've been managing my home since. In between, I've been managing and trying to invest money also. Along the way, I've made some mistakes in investing, and probably we'll be talking about this in this video.
Absolutely. So, alright. So, what we are going to do on this video is that we are going to discuss 4 key things. One is that overall agenda will be that how should parents invest? Should they invest in stocks? Should they invest in bonds or debt? Or should they invest in new age instruments like cryptocurrencies? To what extent how they should go about designing their portfolio? I will observe these points by asking my mom about the key mistakes that she has made in her investment journey so far. Then we are going to do a very important case discussion on the sense that she recently made an investment in one of the companies that did really badly. So we'll discuss that investment mistake and why did she end up making that mistake. Then I'm going to talk about developing a model portfolio for someone who is my mom's age, right? So we'll talk about that. And finally, we are going to actually together invest 1 lakh rupee for Zain, because my mom wants to give Zain 1 lakh rupees, and we will discuss where she can invest that money for Zain. So that is called as intergenerational investing, and we will talk about that and close out our session. So that being said, let's start with the first topic, and before we move forward, please hit the like button. That helps us with the YouTube algorithm, and it would mean a lot to us. So let's get started. So first and foremost, if you can talk a little bit about, mom, that what were some of the key financial mistakes you have made in your life? How do you think about investing? What has been your philosophy of investing? If you can just walk us broadly through that.
See, we have always been safe investors. We have always, most of the times we have been investing in fixed deposits and a little bit, and depending too much on third party the investment advisors and so-called investors. But now, over the years, we have learned that these investors would suggest you to invest only in things where they get more commission. So, I find today that we have made quite a few mistakes over the years. And FDs, I would talk about most of the times it was in banks only, but who doesn't like a little bit of more interest? So we invested in a few companies also. And now I find that major I wouldn't say, but quite a substantial amount of the money we have lost in these companies.
So very quickly summarizing, and let me recap some of the important points that my mom just mentioned. So first and foremost, she has the tendency to invest in FDs because the generation from which she comes, they mostly tend to play it safe, right? So they have been investing in FDs. They trust a lot, especially public sector banks. I'm assuming that you must have had a lot of FDs.
Yeah.
So that is where majority of the money goes in terms of investing. That's one. Second is that a lot of investment advice that you get firsthand, be it from friends, neighbors, and mutual fund
advisors. And advisors also, no? This investment advisors, so-called, no? They would advise to invest in companies which are AAA, which have AAA rating, and we find now, we are finding those companies to go bankrupt. So we are losing about on a major share of the money.
So we'll touch upon more on this point by discussing a recent case where my mom lost a lot of money. And we will talk more about it. But just to quickly recap, one is that their generation invests a lot in FDs, nothing wrong with it. But that comes from the tendency of being risk averse. That, hey, we don't want to take any risk. So let's just go and open a bank account and invest through an FD, that seems like the safest option. Second is that in their generation, what used to happen was, and this is my assessment, I might be wrong, but generally there is a lot of trust, right? That hey, if your neighbor is telling something, or if your relative is telling something, or if your investment advisor is telling something, then people from this generation would generally take others on face value. That okay, this person must be telling the truth, so let us take their word, and they would go and invest. So if you can talk a little bit more on this, that where have you lost money, right? 2-3 major investments where you have lost money because of these mistakes.
See, most recent is DHFL. So DHFL was supposed to be a very good company with AAA CRISIL rating. So here we invested about 20 lakhs and suddenly the company goes bankrupt in fixed deposits and debentures, NCDs we had invested. So suddenly this company goes bankrupt and all our money goes in the
drain. Okay.
In the drain.
And second mistake that you were telling me about was with Franklin Templeton.
With Franklin Templeton 2 years back only we invested around 6 lakhs in short term. Usually they say that you should go into debt funds, the short term income plan. But here also we came to know about 6 months later that the company has closed down 6 of their major investment plans, and our money is stuck up there. Most probably we think that the company will be giving it in parts, in installments, but we don't know till when this will go on. So this was also based on an advisor only. So I've come to learn that we should do our research ourselves and then invest our money somewhere.
Alright, so very important points. So let me just quickly summarize. So 2-3 points. One is that their generation used to invest a lot of money in risk-free assets. Despite that, you would have seen your parents, your grandparents taking unnecessary risk with companies just because an advisor comes and tells them that hey, this company is going to boom, so go and invest your money. So if you're watching this episode with your parents or grandparents, please note down the following things. One, that the investing is goal-based. So goal-based means that, for example, my mom categorically said that hey, her goal was to invest in safe assets. So what are safe assets? Safe or safer assets would be something like a fixed deposit, right? So please go and invest in bank FDs if you want to keep your money absolutely safe, right? So that is a goal-based thing that my mom wanted to play it safe, but unnecessarily she started investing in instruments like corporate debt. So she was speaking about DHFL, which recently got bankrupt. So it was a AAA bond, right? Bond, which is debt, which is considered to be safe. It's corporate debt, but still it went bankrupt. Now, I'm not saying that your bank FD can't go bankrupt, but the chances of that happening is very low. So the first key takeaway from this discussion is very simple, that if your goal in investing is to play it safe, then you should target instruments that are safe. So these instruments could be, for example, fixed deposit in banks. Please don't go and buy corporate debts, right? I mean, that is still riskier than your bank FD. That's one. So where else have you? And she also spoke about the fact that her money got stuck with Franklin Templeton. So this was a recent case where there was a liquid fund called as Franklin Templeton and the entire brokerage house had some issues and there was a liquidity crunch. But I think now you're getting that money back.
Yeah, we're getting it in installments. I still don't know till when it will go on, until what time we'll be able to get the whole money back.
With debt liquid funds, it's still okay to invest. Usually this Franklin Templeton case was an anomaly. It rarely happens, but it can still happen. Again, to cut the long story short, if your parents or grandparents say that, you know what, suggest some instruments where our money is going to be the safest, go and invest in bank FDs. Those are the safest instrument. Why? Because that is called as goal-based investing. Now, let me quickly touch upon the second topic, which is about diversification. Because my mom said that, hey, my goal is, whenever I made investment decisions, my goal was to just invest in the most risk-free asset, right? Yeah. So, diversification means that you should invest little bit of money for safety. You should invest little bit of money for growth. So, you should design your portfolio accordingly. Don't put all your money in one basket. And this is where we get into DHFL case. So, my mom said that she lost 20 lakh rupees in DHFL case. Now, what was your total portfolio size that you were total investing roughly, and how much money did you invest?
It is not exactly 20 lakhs will be losing. It's the investment was around 22 lakhs, about that much. So this is because this company got bankrupt and the resolution plan is going to come. So we are expecting around 30-40% return only.
But the important question is that you had invested 20 lakhs.
In 22
lakhs in that company. So what was your total portfolio size? So let's say that you had 100 rupees to invest. You invested like 20 rupees in one company only. So how did you design investing certain money in different companies? Or did you even make that choice? Or did you put like all your money in like one company only?
No, it's not like all the money. We have money in different banks also. And total portfolio, that's what I don't know, we used to invest whatever money, extra money we had, we used to invest somewhere in FDs or somewhere, and sometimes in a few stocks also, just on hearsay, somebody would say this stock is good and we invested a little, not too much, because major of the money goes into FDs only.
Alright. Very, very important point there. When I asked her that, hey, what is your portfolio size and why did you invest like 20 lakhs in one company? She did not know how much money she has invested, right? And this is a very common problem even with us, that we are very bad in terms of tracking our money. We would have some portfolio, some money we have sent to like mutual fund, we are doing SIPs, we don't know what the total size of SIP is, we don't know how much money we have invested in golds and bonds, we don't know how much money we have invested in individual stock. If you can't even track your money, then you would not know how much money is going to which asset, right? So please understand this, that please keep a good track of your money, right? So that is a very important point. So if you have made a decision that I'm going to invest my money in different companies, then please ensure that you're keeping a track, maintaining a notebook, Excel sheet, whatever, or app. If you're a new generation person, then maintain an app so that you are sure where your money is going. Because if you don't understand where your money is going, so you will not be able to diversify it. So this is a very important point. So of course, I can't talk about diversification because since you have not tracked the money, so I can't say that, hey, whether 20 lakhs investing in DHFL, was it a good decision or a bad decision? But essentially, from a learning point of view, what we need to do with our parents is that please ask them to create an Excel spreadsheet, or you create an Excel spreadsheet for them. Note down all the investments that have happened from their side, whether they have invested in stocks, bonds, real estate, land. Calculate the total value and then create that pie chart, right? That pie chart about diversification. So I will link a video here where I have talked about diversification. So please understand that concept, track the parents' money or grandparents' money, and then figure out how much money needs to go in stocks, bonds, cryptocurrencies, etc., etc. So now let us speak about how parents should develop their portfolio. Now there are two topics here or two subtopics here. One is that your parents would want to invest for themselves. And second is that your parents might be investing for their grandkids or children, right? So these are two different goals with which investments are done. Now let me help you understand that if my mom wants to invest 1 lakh rupee today, how she should go about investing that. So 1 lakh rupees, what are your goals, right? So why do you want to invest for yourself? What are primary expenses that you see churning out in the next few years?
See, it's not about expenses. First of all, after seeing Akshat's videos only, I came to realize that I want to invest 1 lakh rupees for Zing.
Okay.
So I would have gone and deposited it in a bank FD or something, or not today. I wouldn't deposit it in a company FD. I would have deposited in a bank FD only. But after seeing Akshat's videos, I realized that he would be a better he would be able to better advise where to do it, so that when Zain grows up, he gets a better return. So that is why the point of this, that is why I agreed to come on this video to learn from him.
Alright, so I will answer that question separately. So a lot of our viewers as parents might be investing for themselves as of now, right, with that goal. So let's talk about that goal first and then we will speak about investment for Zing. So let's imagine a scenario where you have to invest for yourself 1 lakh rupee. Then what type of investment would you prefer? Do you want it to be very safe? Do you want it to be do you invest for growth? How do you want to balance that? Or do you have any idea about that?
See, I don't have much idea about that. But as earlier, I would have certainly gone for an FD only. But today, when I see, I have made so much of loss in DHFL, one company itself. So I see that I was risk averse at that time. But now, when I'm losing that money in the most safest of instruments, I used to think. So I think I can go a little bit for aggressive investments also.
Alright, so I think that is an incorrect perspective first and foremost, right? Because what is happening in my mom's case is that earlier when she was on the younger side, right, and when she was young, she was supremely like risk averse, that I have to invest in like safe instruments only, so let me go and invest all my money in FD, and that is what she did. And that is how many of our parents operate, right? That they would invest in their early years in safe instruments. It should be the opposite, that when you're young, you should invest for growth, not safety, not like 100% safety, right? So you should invest like an equity split. So equities are slightly more risky. So you should go and invest in direct equities or mutual funds, right? Which are slightly more riskier, and hold little bit of money in FDs. As you grow older, so your age, now you should worry about like the risky side of things. That now you should go and invest in the safest possible options. So what would those safest possible options would be? So one would be FDs, of course, bank FDs. Do not invest in like debt funds and all that. It's not required because you're not after like 0.5% more return, right? Just play it safe. If you're on the older side, have like 80% debt, 90% debt, depending on your age, right? So as I get older, I will also shift more from the equity side and crypto side more towards debt side, because that will give me a cash flow, that every month you will get some expense. Now you know that the rate of FD is fixed, so you will be getting that cash flow every month from the bank. That if the bank FD rates are 4.5%, 5%, 6%, then you know for sure that if you have put in 10 lakhs, then you are going to make a certain cash flow. So that can help you manage the expenses better. So that is one great option. After that, there are dividend-based mutual funds. So dividend-based mutual funds would be something which pays you regular dividends. So if you invest in that mutual fund, so every year or every quarter you are getting some dividend income. So that becomes a great cash flow, and these are relatively stable. But whenever you are picking a mutual fund, please invest only in blue chip, top ranked companies. That's it. And please do not invest in mid cap, small cap, these type of mutual funds. So in essence, this is what I would recommend if your parents are investing for themselves or your grandparents are investing for themselves. This is what they should do. So one is that their investment goal should be to invest in safe instruments. Now there are a bunch of safe instruments that can be explored. One, we have already spoken about bank fixed deposits. There are post office fixed deposits. There are different government bonds to which your parents and grandparents can invest. These are relatively risk-free or comparatively much risk-free. Now, if they say that, hey, tell us more investment instruments, then move towards corporate debt. Corporate debt compared to government debts are slightly more risky, but they are still risk-free because these are debt instruments. Then, if you even have to go further than that, then if you start saying that, hey, okay, can we invest in equities? It is okay to invest a little bit of your money in equities, but try to do it through mutual fund route, because that way you have a professional managing your money. They're not investing for growth. They are investing mostly for safety. But make sure that the mutual fund that you are picking, it invests only in large cap, blue chip companies. Please do not invest in like mid cap and small cap type of stocks. And keep your equity and debt portfolio balanced. So your debt should be higher and it should keep on increasing. With your age, you can even buy dividend paying stocks, right, directly. That should be okay. But mostly your money should be in debt and very little should be in equity. So this is what I would roughly recommend. Now, of course, there can be many other options. Please comment below which other options you are thinking. But roughly your goal at this age should be to go for dividend paying cash flow things which are relatively risk-free, right? For example, a bank FD gives you a cash flow. It is relatively risk-free. So from that angle, it's a safe instrument to consider with your age. Now comes the next question, that now your goal changes when you think about Zain. So why do you want to invest for Zain in the first and foremost place? What is the objective that you see that what Zain will do with that money?
See, it's just like I want to gift him money so that when he grows up, he gets some good returns.
Okay, so
like
you are
as a grandparent, like I would like to invest for him also, no?
Alright. Okay, so that's a usual answer that you will get from any grandparents, and you know what, okay, just take the money and invest for growth of a college and all that thing. But essentially what grandparents are saying there is that take the money and invest for growth. Now, if you're investing for growth, now first and foremost, this money is not for my mom, right? This money is for Zain. Now Zain will probably use this money when he's like 16, 17, 18, when he's going to college, things like that. So probably he might need that money, or if he's starting his own business or something, then he might require that money, and of course he would want to look at growth. So in that scenario, let's imagine that we have 5 lakh rupees, then how we should go about building that portfolio. So one is that we should put in super high aggressive kind of portfolios. So 50,000 to 1 lakh should go in cryptos or new age instruments. That is my advice. Are they super risky? Yes, right? But that is only making up 10% of your portfolio. So invest 50,000 in cryptos. That's one. Second, you must invest in high growth equities. But again, since that time horizon is very long, because Zain might need this money when he is 16, 17, 18. We are looking for stable companies that give returns over time. We are not looking for massive returns because we have already picked a highly aggressive instrument. Now we are picking instruments or equities which are slightly stable and which will stay for at least 15, 16, 17 years. So now there are two ways of doing it. That one, we go and directly invest for Zain by buying equities ourselves. So here I will buy companies like HUL, HDFC Bank, ICICI Bank. These banks will still stay alive for the next 15, 16 years and they will still depict growth. That's our option one. Option two is that we go and again buy large cap blue chip equities, which again generally exhibit 10 to 12% growth over time. So that is our options in terms of investing in equity. So first option was cryptos. Second is large cap equities. And then little bit of money we can invest in terms of debt. So 10 to 20% debt we can keep, right? And that money can go in debt, mostly corporate debt, AAA rating. Unfortunately, did not work out in DHFL case, but that can still be done because mostly it works out. CRISIL is a decent agency when it does the rating, but sometimes, as it is said, that market is very risky and you should do your own due diligence before investing. More importantly, you should track what is happening. So, which brings me to the final question: that did you track the DHFL case? And did you ever get a chance to take money out of it, or did you just one day learn that hey, DHFL has gone bankrupt?
Yeah, we were not keeping any track of the track of the companies or anything. Once invested for 3-4 years, so we forgot about those.
Right.
Suddenly came to know that it has gone bankrupt.
Right. So therefore it is very important to keep following news, especially if you have invested a lot of money in one single company. Please keep a track, because even the corporate ratings change, right? At the time when my mom would have invested in DHFL,
that time it was doing very good.
Precisely, right? But if you do not keep a track for 3-4 years, then probably even the bond ratings might change in that time frame. So therefore it is very important to keep a track as to what is happening and accordingly adjust your amount that you have invested in it and get out of it in case you find something very fishy. So that is the moral of the story, that in summary, number one, the investing should be goal based for your parents. If they are doing it for themselves, make sure that it pays a cash flow. So invest in dividends and dividend paying stocks, dividend paying mutual funds, FDs, risk free assets. If they are investing for their grandchildren, like my mom is doing for Zain, then we should do it slightly more aggressive, and we are going to finally show you where we are investing for Zain via cryptocurrencies and which cryptocurrency we are buying and why. So I will take that part over and explain it. But final words, anything finally that you would want to share with our audiences in terms of your investing journey so far?
Yeah, I've learned today that it's very important to keep track of your money and to not just go and believe a third party and without doing due research, you listen to them and go into those investments. So it is better to keep track of your money. It is your hard-earned money, and you should invest diligently and always be aware of the news and what the companies are doing. Wherever you're investing, no?
Absolutely. So the bottom line is that don't trust anyone blindly, including me, right? Please do your due diligence. I have said it 1,000 times. This channel is for education. I give out all the concepts, all the things that I am doing. I do my due diligence and invest. Market is a risky mechanism. Yes, you should learn about it, learn investing, invest your money and grow your money. But at the same time, please learn all these things yourself. That is the central point of our discussion today. So I have 1 lakh rupees in my trading account, and now I'll go on exchange and I will start buying different coins. So first and foremost, I'll buy Ethereum. I'm quite bullish on Ethereum, so I'll buy it for 50k. Buy now. And done. Next, I'm going to buy Bitcoins. So I go on Bitcoin and I'll buy it for 30k. So buy now and I am done. Then finally I'm going to make a fresh investment in Matic. So this is another coin that I'm quite bullish about. So I'll buy it for a little amount and I'll keep upward averaging it. So I'm going to buy Matic, proceed, and I'm done. Now next I'm going to put a little bit of money, or rather I'll put these coins in fixed deposit. So that's one functionality of Vault that I really like. You can see that previously I have earned an interest of 96 rupees in the last 1 week when I had invested 1 lakh. So I'm doing FDs now. So Ethereum done, Bitcoin, I'll do it for the entire amount, fixed deposit created, and I will do the same for Matic as well. So Matic 100% and create FD. So I'm done. So my total investment now is approximately 2.1 lakh, and let's see what the portfolio shows the next time around.